Thank you. Welcome, everybody, to the County Employee Retirement System Finance Committee regular meeting, February 16th, 2026. So I'll call it to order. And Mr. Bronco, would you give us our legal public statement, please?
Of course. This is a regular meeting of the County Employees Retirement System Board of Trustees Finance Committee. This meeting is being broadcast via video teleconference pursuant to KRS 61826 and may be viewed by the public at the Kentucky Public Pensions Authority offices located at 1260 Louisville Road in Frankfort, Kentucky. It's also being broadcast to the public live via Facebook. If you are speaking and not appearing by video, please identify yourself before talking. The video or audio broadcast is interrupted. We will attempt to reestablish a connection. If connection cannot be reestablished within 30 minutes, the meeting will be adjourned and rescheduled to a later date.
Thank you. Ms. Rankin, can you do the roll call for us?
Yes, sir. Mr. O'Mara.
Here.
Dr. Carver. Mr. Cheatham.
Here.
Mr. Fulkerson.
Here.
And Mr. Webb.
Here.
Thank you.
Thank you. And public comment, Ms. Rankin, can you go over the public comments for us?
Yes, sir. We received 20 comments in this meeting for this meeting. And all of them, I've reviewed all of them. They all reference support for House Bill 406, the 13th check, or COLAs. So they were all in gaining support for that measure.
All right, thank you. We'll be watching the legislature through April. Next is approval of minutes for the November 24th, 2025 meeting. Is there a motion to approve the minutes from that meeting held on November 24th?
So moved.
Thank you. And I have a second?
Second, Mr. Chair.
Moved for first and second. Are there any questions, discussions, corrections for those minutes? Hearing none, all in favor, please say aye.
Aye.
Opposed, no. Those minutes pass. Next on the agenda, introduce Ms. Connie Davis to give us an update on GASB 68 and GASB 75. Ms. Davis.
Good afternoon. Thank you, Mr. O'Mara. The GASB 68 and GASB 75 proportionate share audits and their reports are being done by Eide Bailey. They have provided us some draft reports and we have reviewed them. They have in the draft reports that we will be receiving an unqualified or clean opinion on the GASB 68 and 75 reports. They are finishing up some review processes on their end, and we'll have the reports available for the KPPA Audit Committee and for the CERS and the KRS board meetings. Are there any questions regarding that?
And those meetings will be in March of this year, is that correct?
That's correct.
Right, that's an update with no action necessary. Does anyone have any questions or clarifications needed from Ms. Davis? Hearing none, let's go to the quarterly financial reports. That would be Mr. Lamb. Would you walk us through those, please?
Absolutely. Thank you. We're going to start near the bottom of page 8 in the second to last column. You can see that the CRS total for fiduciary net position is $21.3 billion at the end of quarter 2. That's up 11.41% or $2.175 billion from 19.036 billion of the prior December 31 of 2024. The two pension plans, they total $15 billion, and that's an increase of 11.91% or $1.6 billion. And the two insurance plans total $6 billion, and that's an increase of 10.17% or $555 million. There are various notes documenting changes plus or minus 10% on the right-hand side. For example, note 7 addresses the change in real return because of additional funding of new managers and favorable market conditions. In the middle of this same page, the total investments at fair value have increased overall by 12.29% or by $2.3 billion. The pension plans are up 13.15% and the insurance plans are up 10.18%. The largest increase in fair value is with public equities, which is up 15.03% or 1.3 billion across all plans. That's followed by real return up 426 million or 45.81% and specialty credit, which is up 320 million or 8.25%. If we go ahead and go down to the bottom of page 9, in the 3 rows up in the second to last column, you can see 1.078381 billion, and that represents the change, in this case, an increase in the fiduciary net position through the second quarter of this fiscal year. In the same period of the prior fiscal year, there was an increase of 510 million. So this year is 82.68% higher or $488 million more through the second quarter. The two pension plans show a 549 million and a 233 million net increase respectively, for a total of 782 million. The prior year's increase was only 452 million or 330 million less. The two insurance plans show 222 million and 74 million respectively, for a total of 296 million, and that's 158 million or 113.98% higher than the prior year amount of 138 million for the insurance plans. This higher amount between current year and prior year change is driven by overall net investment income being 57.8% higher, or 473 million more. Total deductions year to date have only increased by 1.8 million. Benefits have increased by 24 million, yet healthcare premiums have decreased by 22 million. And that looks a little bit odd, but if you look at note 4, it helps explain that. We did receive a large payment from TRS for healthcare reciprocity in the second quarter that covered a 4-year period of time, which was nearly $39 million. And so that looks like the benefit payments are a little bit less this quarter than they had been in the past. If we scroll down to page 10, we can examine the contribution reports a little further. And so through the second quarter of fiscal year 26, the pension plans received 406.6 million in member and employer contributions combined. Last year, they received 395.10 million, or 11.5 million more was received this year. Member contributions are up 5.7 million, employer contributions are up 1.5 million, and the employer pay credit was up 4.3 million. The contribution rates for non-hazardous have decreased year to year from 19.71 to 18.62% for the hazardous from 36.49 to 34%. However, salaries for Q2 were $93 million higher, with 3,305 more participants. And for non-hazardous, the salaries were $32 million higher. For hazardous, the salaries were $32 million higher with 302 more participants. These increased salaries and headcount have led to increased employer contributions despite the decrease in the employer rates. And the increase in salaries headcount has also led to higher member contributions. The net investment income for the two pension plans was 174.4 million and is 20.5 million or 13.32% higher than the prior year amount of 153.9 million. Both pension plans paid out 744 million in benefits, refunds, and admin expenses versus 718.2 million, and that's 25.8 million more or 3.58% higher than the prior year. All of that shows that on the light yellow net contribution line, the CERS non-hazardous pension plan had a negative net contribution of 7.9 million, and the CERS hazardous pension plan had a positive net contribution of 34.3 million. However, when we remove the net investment income of 127.4 million and 47 million respectively from both plans, the CERS non-hazardous plan has negative 135.3 million cash flow, while the CERS hazardous plan has a negative 12.7 million cash flow through Q2. If we scroll down a little bit more, we'll look at the insurance contribution report, and the light yellow line there shows that the CERS non-hazardous insurance plan has a net contribution of 20.4 million. Again, KPPA received a TRS reciprocity payment in December totaling nearly $39 million, of which 29 million was allocated to the CERS non-hazardous plan, reducing the healthcare premium cost for the quarter. And so the hazardous plan was allocated 115,000, and that payment for both plans covered fiscal year 2022 through 2025. So if we remove the net investment income from the non-hazardous plan, you can see that the net contributions less investment income equals a negative $24.6 million, and for the hazardous plan, a negative $40.8 million respectively. That is the financials and contribution reports for CERS, and I can move on to invoices if there's no further questions on those.
Any questions for Mike?
Mr. Cheatham has his hand raised.
Quick question, Mike. I saw your note with regard to the TRS payment. Did I understand you say it was from 2021 to 2025, not 2011 to 2025? Is that correct?
Their payment was specifically from 2022 to 2025.
Is that normal for them to have a 4-year catch up, or how's that intended to work?
Yes and no. They've been paying sporadically, and usually they're in large chunks covering a large period of time. We are currently working with them to, on a going forward basis, set up something that's more on an annual payment basis. But the payments that have come from them in the past and in prior years, we were actually the ones paying them, like back in 2011. It was on a more periodic basis, not annually.
Okay. Can you keep us apprised as to what you all get worked out as far as your process going forward?
Absolutely.
Thank you. Any other questions for Mike? Go ahead, Mike.
So the next page, 11, this is the past due invoices as of December 31st for CERS. We've combined the top 10 employers by dollar amount, and then the invoice type related to those employers are kind of the subtotals there. The total amount that was past due as of December 31, 2025 was just over 3.1 million. Conversely, the September 30th, 25 past due amount was just over 1.5 million. And that has been the lowest balance it had been since we've been tracking this. A year ago, or at 6/30/2025, the amount was 2.3 million. So this amount at December has grown a little bit over the past quarter. And it's actually one of the highest past due balances since October of 2024. And at October of 2024, that balance was 3.8 million. So there's a couple of things I want to point out as to why this has increased, specifically since September through December. There's 104 more total invoices and 1.5 million past due related to 3 large employers. The Elliott County Ambulance, there's 81 more invoices totaling $1 million. So as you know, that's been handled by legal in the past, and our ERSI group has gone through and accounted for all of the omitted billing that entity has overlooked and has billed them for all of that omitted billing, and that's over $1 million of omitted. And it's now reached a past due status and is being worked on through the legal team and the ERSI team. The Anderson County Fiscal Court has 12 more invoices, and 350,000 of that is past due. That was the result of an ERSI compliance review, and it resulted in identifying an employee that was not being reported correctly, and that is the catch-up contributions related to that specific individual over a period of time. That case is actively being worked on by ERC. It has not yet gone to legal, and we expect some progress to be made over the next few months related to that particular review of their employer reporting. The Kentucky River Regional Jail is also still being worked on by legal, and there hasn't been much progress either way on that particular invoice. The Leslie County Fiscal Court has 16 more invoices and $25,000 more past due related to monthly penalties, as well as for 2 health insurance reimbursement items. So that's the increase of the dollar amount, as well as the increase in the number of invoices that are past due. Since this report was generated, there's been $96,000 of the past due invoices collected in the top 10 employers. And if we take out Anderson County and the 2 items being worked on by legal, Elliott County and Kentucky Regional Jail, there's approximately $415,000 past due that's still actively being worked on by the ERC team. The chart at the bottom of this page, I think it goes on to the next page. It kind of shows the trajectory of the past due balances and the number of invoices since June of 2024. And as you can see, it's crept back up at the end of December compared to where it was earlier in the year. Sherry, if I could have you go to page 18. My page has got a little bit out of order, but this is also the penalty waiver report that we present every quarter. So this shows that during the second quarter, 10 penalty invoices were waived or canceled for a total of $10,000. 18 penalty invoices were created for a total of $18,000, and 31 penalty invoices were paid for a total of $31,560 for the quarter. And so that's the end of the invoice reporting. Happy to take some questions if you have some, and then I'll go into the admin budget.
Do we have any questions for Mr. Lamb?
Yeah, Mr. Owens has his hand raised.
Thank you, Mr. Chair, for allowing the question. Mike, related to the past due invoices, how did the Elliott County Ambulance Service come to light? And I see that it's listed as over $1 million in 90 days. Did that come about all at once, or is that an accumulative amount over a period of time that we just became aware of?
So if you recall, Elliott County, I think, came about several months ago. And I think it was related to an employee there who went to retire and didn't have service with us. And so then we did an investigation, determined that they hadn't been reporting. And I think the legal team got involved with that. Then ERC went ahead and did their review, got the payroll records from Elliott County, determined who they had not been reporting. And so that $1 million of omitted basically says, hey, you owe for all of these employees that have not been reported by you, and they did their billing. They did their billing in October. And so by the end of, well, they did it prior to October. So it wasn't past due in September, but by the time it got to December, it was past due. So that was just the accumulation of all of ERC's review after obtaining all of the reports that had not been reported on by Elliott County. So it was a one-time billing, but it was a catch up for all of the employees that have not been reported over a period of time from Elliott County Ambulance. Does that
Mike,
help?
what period of time are we talking about?
Some of that goes back to 2018, I think, when I looked at one of the invoices.
Yes, that's correct. For a period of, want to say at least 2 years, Elliott County Ambulance Service did not report due to, they said they were, lost some records in the fire, things like that. So we had a lot of communication with them. But just recently, Shauna Miller and her group billed all the omitted invoices, and that's why you're seeing that amount now, because it's now past due. So it's now in legal's hands to try to collect those contributions from Elliott County Ambulance Service.
So did I understand you to say that they didn't report, period, or they misreported?
Correct. For a 2-year period, they did not report.
Okay. Mike, I think on previous reports you had these, your top 10 or whatever, had an asterisk or something that were, indicated we were in actual court issues with, and the amounts were essentially frozen. I didn't see that on any of these. I'm assuming Kentucky River Jail is still still the case. What about the rest of them?
Yeah, Kentucky River Regional Jail, I believe those are past due items that are being worked on through legal. I prefer to talk about them in a closed session, but these other ones that are with legal or recently with legal, Elliott County, for example, because of their lack of reporting. So I would anticipate Elliott County's $1 million past due omitted to continue to age until that agency obtains the capacity to pay for what they owe. And how they do that will probably be worked out with legal as well. But
I'm sorry, go ahead.
yeah, so I don't know if there's another employer that you were thinking about that may be with legal. I know there's one on the K side that we're not billing currently for because of a court order, but I don't think that applies to the C side.
Okay. The employee who brought the issue at Elliott County to light, was Elliott County his only C employer?
I'm going to ask, for one, let me clarify with Dewan that's how that got brought up, and then he may have more information on that.
No, I don't believe, I'm not recalling that specific case as far as the one employee. Elliott County, that there was an issue with them having a fire, losing records. And then ERC had been trying to deal with the new director to report all the missing reports. And this went on for a while. And then finally we got legal involved. They got a new director in, and that new director has been working with us and is now reporting, but they just don't have the funds to pay those omitted billings. So
I understand. I thought I understood it, that how it came to light was there was an employee that came to apply for retirement benefits, and it came to light that way. Is that correct or not? Did I misunderstand?
I did say that. Let me clarify if that's correct. And Dewan, you could correct me on that wrong. I know that happened with one employer, but it may not be with Elliott. So I apologize if I most misspoke related to this specific employer.
yeah, I'm not sure if this specific employer was that case, but yes, you are correct that members would not have their service credit for a certain period that Elliott County did not report.
Well, I know a lot of EMS and paramedics will work several different agencies, and that's why I was curious as to how it did not come up. That he, I'm assuming they will check their benefit, online periodically, that it wasn't being done.
Yeah,
I think the agency I was thinking of was Elkhorn City. I believe that's
yes, I think that's the one you're speaking of, Mike. Elkhorn is city.
So I apologize.
That's correct, Mike. Thank you.
Yeah.
All right. Thank you.
All right. Any other questions on this topic? If not, Mr. Lamb, you want to go forward?
Yes, let's go to, there we are on page 13. This is the summary admin budget through December 31. For the personnel category right there, KPPA has spent 51.52% of this category, and we have 19, excuse me, we have 51.52 left to spend, or 19 million. Year-to-date spending is 4.68% higher than the prior year. There are certain individual line items within this subcategory that we're continuing to closely monitor. For example, salaries and wages plus locality premium, they are budgeted together but tracked separately. If you wanted to follow along, sure, you could stay there, but those line items are further down in the admin budget. So they're tracked separately and combined. those two line items, we've spent 49.06% of the annual budget. We've spent 45.22% of employer FICA, 48.4% of employer paid retirement, and 51.6% of employer paid health insurance. That last line item is likely to exceed the annual budget by about $100,000. These line items are related to the increase in salary overall and locality premiums. The workers' comp line item is currently at 62.43% of the annual budget, but that represents an annual premium, and that line item will be under budget at year end. And overall, the subcategory is on target to be at or slightly below budget at year end, with us keeping our eyes on some of those individual line items specifically. The legal contract line item, there is plenty of capacity within every individual line item in the legal category at this time. The auditing line item looks pretty low. However, the external audit invoices totaling $156,000 for the ACFRs were paid in January, bringing year-to-date cost to $169,000. That line item should remain under budget for the year. We will get billed for the GASB reports when they are complete. The actuarial services current costs are 31.25% higher than the prior year at this time. However, this category is trending below budget and is expected to remain under budget throughout the year. The medical reviewers current costs are 12.86% higher than prior year. However, also trending below budget and is expected to remain under budget. Other personnel, the category is significantly under budget through Q2, but this category does contain the budget for the IT assessment, which is under miscellaneous contracts, and that was just recently initiated. So I think the costs related to that will be catching up over the next 2 quarters. The operational total is trending below budget, with most line items on target to be below budget through the fiscal year. However, there are a couple individual line items in here as well. Conference expenses, that line item only has 42% left of its remaining budget, but that does include the October Impact Forum conference costs, and so overall for the year it should be under budget. Dues and subscriptions appears to be over budget through the first half of the year, but many of those are annual dues that are paid at the beginning of the calendar year, and therefore that line item should also be under budget at fiscal year end. And there's one small item called the carpool line. That item is likely to exceed budget by $1,000 by year end if I was looking at the trends hitting that line item over the past 6 months. And there's one line item that's insurance for state risk. It's already over the budget amount by $5,192. The budget was $7,500. The actual premium was $12,692, and that was an oversight on my part. And all other individual line items in the budget area, in this budget area, are on target to be below or at budget for year end. So overall, through Q2, KPPA has spent 44.11% of the fiscal year budget amount. Current spend is 1.23% higher than the same period last fiscal year, and we have $28 million left to utilize in the second half. I did want to point out we did receive an additional $149,500 of funds from the State Budget Director's Office for fiscal year 26, and that's been added to the reserve line item. So the KPPA board approved the budget prior to that 149 being added. After the budget office reviewed all the increases related to locality premiums and whatnot, they added $150,000 or $149,500 to our budget spend, and that's what I've added to the reserve there. The last page, or on page 16, it shows how this $22 million has been spread among the 5 pension plans based on the hybrid percentage. And then the next chart on page 17 shows the interest that's been earned in the JP Morgan accounts year to date. And I think that's all I have on the admin budget and related reports.
Any questions for Mike? All right. Do you have one more?
I have the investment trust budget if you have questions on that, but I think it's later in the agenda.
I think it's next, as soon as you're done with quarterly financial reports. Mr. Willer is not here today.
Correct.
Oh, I'm sorry. You are correct. There's hazardous duty. Sorry, Dwan, didn't mean to leave you.
Not a problem at all. All right.
Can you walk us through the hazardous duty?
Yes, today we have 15 positions being requested for hazardous duty. Staff has reviewed the positions and they meet the statutory guidelines for hazardous duty coverage. Position questionnaires and job descriptions were submitted. If anyone has any questions about the positions, I'd be happy to answer them. If not, I would like to request the committee to approve these to go forth in front of the Board of Trustees for final approval.
So we have a motion to approve as presented. Do I have a, excuse me,
I've just
you have a
got
question?
I've just got a couple of quick questions. Kenton County, I noticed two of those positions, three of them, excuse me.
Yes.
One of them goes back to 1999, the other two to 2010 and 2011.
Yes, that came after a review. We found one member was being reported in an incorrect hazardous position. And that caused us to do a review. So these positions they are requesting for now are to be retro back to that date. Those persons are being reported in the hazardous position now. So we're not losing any coverage, any contributions at all, but we just need to get those members reported correctly under the correct hazardous position. So that's why they're requesting the retro dates.
Okay. A little bit off subject, and then I'll be happy to second your motion. Can we get something, in our next meeting that kind of gives us an idea what the trend line is with regard for requests for new hazardous duty positions, over say the past 5-year period of time? Were we seeing an increase in those requests, or is it
Okay.
staying pretty much the same, or what?
Yes, we can do that.
Okay, thank you.
Okay, do I have a motion to approve the hazardous duty positions as presented?
Yeah, so moved.
All right, thank you. And do I have a second?
Second.
All right, any further questions or discussion? Hearing none, all in favor, please say aye.
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 Any opposed, no? All right, those pass. Thank you, Mr. Schrott.
Thank you.
Now we're to investment budgets.
I'm
And
back.
Mr. Willer was not here and asked Mr. Lamb to walk us through that.
Yes, so through the second quarter, 3.1 million of the $11.8 million budget, or 27%, has been spent, leaving 8.6 million left. The consulting services category is right on target, with the three main vendors right at 50% through the second quarter. The contractual service category is slightly over target at 54%. Solovis is on right at 100%, and it's an annual renewal. The J.N. Giavara and Company, this is a corporate tax consulting service for, I think, some of our India investments. This year we spent $128,000. We do not anticipate any additional costs, but that does cover multiple years. The billing related to that agency is somewhat sporadic. And so that's why you see some gaps in years and then a large charge related to that one. Most other categories or line items are at or below 50% of their total budget. And investments will continue to monitor that category, but do not anticipate any significant overspend, if any. Legal services are also running significantly below budget, with only 4% spent year to date, which I think is good news for all of us. And that is the notes that I had on the investment budget.
Thank you, Mike. Any questions?
Mike, I know it's in your department, but if you can look into it, Ed, chime in and tell me which one I'm the contract that was previously entered into without any kind of bid process. I thought it was originally $250,000. Now it appears to be either 270 or 320. I'm not sure whether that was Solovis or whether that was Allborn. What's the status with those? Are all indications are we're not using it or not using the one that got contracted with. Why are we still shelling out for it?
I will have to get back to you on that, and we'll do so.
Okay.
All right, there's a follow-up for investments. Do you have any other questions, comments? All right, hearing none. Well, this is a regular meeting, so other business. Does anyone have anything else?
Well, Sherry, I might add the after action report will be covered by your new employee. Maybe introduce her.
Yes, I do have a new employee that started today, and I'll let her unmute herself and say hello. But this is Mary Hill. She is our new admin specialist that's reporting here to the executive area.
Welcome,
Hi,
Mary.
everyone. Happy to be here.
Glad to have you.
So we will put that on the after action report. Yeah.
Just remember, Mary, to do whatever Sherry tells you and you'll be fine.
Good advice. All right. That being the end of our agenda, I think we had a very efficient meeting, and we can bring the meeting to an end. So I'll declare the meeting adjourned. Thank you.